16,000 options contracts today, May 11:29 a.m. on Google. Alphabet's rallied 5%. In this video, we're going to show how we are trading it and also what these unusual options mean. And will Google break its high from last year at 122? Because we are approaching that, and you'll see here this resistance here at this level at the 120 strike price has tested this in the past here, back in June, back in July. It broke out in August for about a week, and it came back down. And so we're going to go over these unusual options at the 120 strike price. So when we look at these unusual options, you'll see here Julys are here, lots of these puts here, same time here. This is a different time. What does this all mean? Because this was all done for 680. Is this a buy or a sell? Because this is colored at the green, because it's colored for at the ask price. It was done at the ask price. This was done at the bid price. And so we're going to take a look at this more closely to determine what is happening with Google. So let's get right to it. Because these are being executed at the same time, or the same price, and also same time, we have to really dive into the time that it took place. And so if we were to start looking at the 9:56 14-second mark, we can move down to the 9:56 14-second mark. Let's go down a little faster. Okay, it's going to come up soon. And so keep an eye on the 120 strikes, Julys. You'll see that here at the 13-second mark. We have this happening, 680. This was the market pricing. And then as we go down more, you start to see that 14-second mark come in, and more of these start coming in at the 680 again, that same price. And the market, what has happened to the market now? The market has shifted up. In comparison to 1 second ago, you'll see this here, right? 1 second ago at the 13-second mark, this is the 14-second mark, 120 strike price, 120 strike price Julys, right? The market shifted up. And why would the market shift up for this here, the 690, right? The reason why is because there's a lot of buying pressure. Lots and lots of buying pressure. And so what you're seeing here is, although these are being executed at the bid price, it's being bought. So this red does not mean they're being sold. And so we believe that this is being bought. And so based on this, we're going to now look at the trade we did based on this, these 16,000 puts being bought. We know they're open orders. They're much greater than the open interest here. And so if they had bought this, you can see what the analysis is it is bearish. So current price at 117. As the price goes down on the x-axis, this will rise in profits because this is above the profit loss of the 0 on the y-axis. So this expires in July 21. And so we did a separate trade that's different than this. We didn't just buy the 120 strike puts, and we'll explain why. We bought the 125 strike puts. And one of the reasons right away is because the extrinsic value of it is at 2.1. It's much lower than the 4.1. So we're trying to buy less extrinsic value, and then we want to sell something close to that extrinsic value or more. So you see we are selling a higher extrinsic value to cover our cost basis in extrinsic value. Not price, but extrinsic value, because extrinsic value is the cost of the actual option itself. We want to be net extrinsic, net positive in extrinsic. That's ideal. You can't always get it at that, but as much as we can do to lower that extrinsic value. So we, as you can see, we sold the 117.5. It is, you can get the most extrinsic value because it is at the money. Currently, Google is at 117.49, very close to that strike price. So you can get maximum extrinsic value. So this is what our trade looks like. And so you'll see here, same thing, as the price goes down, it will be profitable. And so when we look at the Greeks, you'll see it is a positive theta, positive vega, and negative 20 delta. And if you compare that with the other trade, the unusual option trade where they bought all these put options, this is a negative theta trade, right? It's a much higher, more negative delta. So that's the advantage. If you want to get more negative delta, you can, this trade does that. However, you could also, if you wanted that negative 50 or something like that, you can just increase the quantity of our trades. If you buy 2 of them, you get more. You can increase your deltas by just the quantity. However, you do pay a little bit more if you do that. But we don't want that negative theta risk, because as time passes on, the value of these puts will decrease in value just from the time. And Google would have to, at expiration, drop below this break-even point at expiration for this trade to even be profitable. That's 113.5 price of Google. And so it would have to move quickly, soon as possible, down. So expect to see that possibly happening. And so for our trade, you could see our break even is actually higher, all the way up to here at 121.74 at expiration. So we like to have that break even at a higher level here, because it could rally up, but we will not be at a loss at expiration, because that 121.76 is also it's near that critical resistance level here, right? If it can break that, then we will probably take our trade off. It depends on also the unusual options activity as we monitor and analyze this. So that's something that we are taking into consideration, the break-even points too. And basically it's setting up our resistance levels at that point. When you look at the unusual options, these puts, the break-even on the upside here is only at about 117 for today, but it starts to shift all the way down as time passes because you have the theta decay. And so that does not happen on our trade. And so, in fact, it shifts the other way, this way, as time passes because we have a positive theta. And so this is less risky if you want to be more conservative. That is the main difference, and also the fact that our trade only costs $558. That's it, compared to the other one with $645. So it's actually cheaper to do our trade. So that is how we are trading these unusual options. As always, we don't always follow the unusual options, and this is an example of that today with these 16,000 unusual options. We actually made a video about this, how we should, if to be profitable, you don't always have to follow the unusual options. So make sure to watch that video at the end of this. We'll put that description also to explain why and why it matters, and so that's something you can watch to learn more. If you enjoyed this video, please smash that like button, and please let us know in the comments below what you think will happen at Google. Will this rally continue? Will it break the high from last year? We're at 117. Please comment below, subscribe if you haven't, and take care, everybody, and good luck.